Jeff to share. And welcome to our advanced market series, annuities, week 5. Thanks to the generous time and expertise of Jeff Sigworth, head of advanced markets over at Quility. Jeff, I'll let you take it from here.
Thanks, buddy. Yeah, so Mark and I texted a little bit here this morning, just wondering what would be the best use of your time. I thought maybe we could run into an open forum on annuities. I mean, we're at week 5. I think we went through the presentation, a little bit of objections, but I was thinking maybe we could do one or two things. We could start maybe with FIFs. However, next week, I'm not going to be here. I'm going to be out of the office all next week. Or we could just do an open forum, any advanced market sales, DFL, IUL, annuity questions that you guys have. We could just spend, there's not too many people on here, so it'd be great if we could spend that time and just answer any and all questions that you guys have. Or if you want me to start rolling with FIFs, I could do that too. It's up to you.
I think depending on how extensive you think FIF is, maybe we kick it off with FIF and then open it to general questions, IUL, DFL, annuities. What do you think?
Okay.
Enough time for that?
This is for you guys. Yeah, there's probably enough time for that.
All right. Awesome.
All
Let's
right.
do that.
Let me open up. I'm going to share. And there it is. Open up my screen here.
All right.
Go to HQ. Let's pull up the FIF. Is anybody using the FIF on this call? Financial fire drill stuff. Yeah. Okay. A couple of you, some are not. Well, that gives me a good. I think it's under mortgage protection. I think it's that. Oh, they changed it on here.
I know they keep shifting it.
They keep shifting it.
I'll look as well. Let's see.
There it is. I got it. I found it.
Nice. There it is. Thank you. And guys, if you can log into HQ while Jeff's pulling his up, it'd be helpful for you to know exactly where that is and maybe follow along.
So first, we want to enter into the FIF, and the best way to handle objections is not to get them. Would you guys agree?
Yes.
Best way to handle objections is to try to cut them off at the pass. If we can cut objections off at the pass first, great. And keep in mind, guys, I've never done mortgage protection, so I'm going into a realm that you're more familiar with here. I'm familiar with the why we ask and the how we ask, but actually doing it from a mortgage protection standpoint is new for me. So we want to give the client a reason why we're asking. Hey, Mr. and Mrs. Client, in order for me to properly insure you, see, by law, I'm not allowed to overinsure you. Okay. But I definitely don't want to underinsure you either. So in order to properly assess, right, the amount of insurance, you not only have to qualify health-wise, but you also have to qualify financially. Right. So if you're going to qualify financially and qualify health-wise, I got to make sure I don't legally overinsure you, and I definitely don't want to underinsure you. Does that sound fair? Okay. So we go in and we would say, okay, now you should have their mortgage information on your lead card, correct?
Yes.
One of the best things to do is to verify that information. You want to verify that information. Hey, your lender here says it's Wells Fargo. Is that still the case? Okay, yeah, it's still the case. What's your interest rate? When we ask interest rate, I always say, is that a refi or is that a new purchase? Why do I want to know that?
Because if they've refied, their price is going to go up, and usually in their mortgage amount.
Their mortgage amount will go up. It'll restart amortization. But usually, if they refinance, maybe they got a lower rate. Maybe there's some discretionary income in there. Okay.
Okay.
Why do we want to know the term of the mortgage?
Well, that's going to tell us how long they need the coverage for. I mean, as far as.
Well, That's
You don't want
right.
to get them
And
something, you don't want to get them something when they're only on 15 years for 30 years.
okay, so you're right, 100%. But let's think about it let's think about it in a second or third phase.
Okay.
Okay, why would somebody want a 15-year mortgage?
So it's paid off sooner.
Yeah, good job. That gets into the psychology of, hey, they're making it a priority to pay down their debts. Can we use that later? Yeah, we can. We can use that for DFL later. Okay, loan amount, right? We don't want to overinsure them or underinsure them. Payment, are they making any accelerated payments? Okay, why do we want to know that? Why do we want to know if their payment is accelerated?
I don't want to know if the payments are accelerated.
So you're making any overpayments to your mortgage, Mr. and Mrs. Smith?
Because depending on how much they pay, maybe we could redirect it.
Yeah,
So it
exactly.
benefits them more.
We might be able to redirect it, number one, and number two, it tells us more about the psychology of what's going on with those clients, right? Tells me more about what's going on. Is paying off debt could be a priority to this couple, okay? And then why do we want to know the estimated equity in the home? What's the purpose behind knowing how much equity is in the home?
For mortgage protection, you usually use it for a critical period.
Yeah, you could use that. That's perfect. Also, I just ran into that's what I was going for, but there's also some other implications here. I just had a case not too long ago, probably 3 or 4 months ago. Guy's 85, his wife is 63, I think. Just refinanced, 0 equity in the home. She doesn't work. Okay. If he dies, he's the only income. Her Social Security, which was like $900 and some dollars a month. If he dies, she's homeless. Okay. So what we did is we put a DFL case on her so they could get out of debt and accelerate that pay down. So not only she might be able to stay in the house, she'll end up getting his Social Security because you get the greater of the two, but it still wouldn't be enough to make that payment. But if he can live for the next 8 years to 93, they're going to have that house paid off. Okay. So we really want to know from a protection standpoint how much equity is in that home. Now, here's a big deal. Right here, we have our first transition. Who wants to give me the transition from mortgage to insurance? Because you're gonna be like, hey, I was talking to you about mortgage protection. Why do you need to know what else I have? How do you transition from the mortgage to the insurance information?
So, Jeff, one of the things that I've heard that I
Mhm.
like is something that you just spoke to. You don't want to overinsure someone, but you also don't want to underinsure them. Now, one of the things that, and it's actually was annuity presentation in the spot of in one of our SoundClouds, where the gentleman said, you know, what I don't want to do is to offer you something that you already have. So I think from my segue, I'm thinking, okay, we want to know what you have because we're not here to give you something that you don't already have. So that's one of the ways that I do it. So
Yeah,
in order to do that, we need to kind of figure out what you have in place.
yeah. It's Julian. That's simple, dude. Hey, I just want to see what you already have. Do you have something through work? I don't want to charge you too much where it's unaffordable. I don't want to underinsure you. I want to know exactly what you have so I can provide your family with the best possible protection. Okay. So perfect. What's the most important column when getting the insurance information? Because we're insurance agents. I think you know what types there are. I think you know the face. I think you understand what the purpose is, why we want to know what we're paying. We can go through that, but what's the most important one here in insurance? What do you think the most important column and heading is under insurance information?
Face amount
Nope.
or purpose.
Purpose.
Purpose. Yeah,
Purpose.
purpose. What's the purpose of that? So let's say somebody comes to me and says, "Hey, Jeff, I got this whole life policy. It's going to gives me this death benefit, but it's also going to give me tax-free retirement. Now I'm paying $150 a month and my death benefit's $500, or I'm paying $150 a month and my death benefit's 500 grand. What is my number one spidey senses going to do? My spidey senses are going to go, "Brrr." Why? You guys took the IUL class. You guys should know. Somebody says they got some kind of whole life product. They're not sure it. The face amount's 500. The purpose is tax-free income, and they're paying $150 a month. What is your spidey sense going to do?
Hey, I have this program that can work really well for you.
Not here. I wouldn't do that until the end. You don't want to show all your cards right away, right? We know that IUL is not, or whole life or whatever it might be. We know it's not set up most efficiently. It's not set up well at all. Okay. So what we're going to do is we're just going to kind of give that a check. We're going to make mental note of that and be like, okay, what's the purpose of that? Okay, it's tax-free retirement, or hey, get a bunch of tax-free money at the end. Interesting. Okay. Right. Then I would say probably the face amount and the expiration date here. Okay. We want to know the type. A lot of people think they have something they don't have. Okay. Obviously we want to know existing face amount. Purpose is the most important, and that's what we want to know exactly what they have, because they might have coverage through work. Okay. Maybe we can justify that as income replacement, but maybe not to protect the mortgage. So we can start truncating insurance and how each insurance policy can apply to their life. Premium, why do we want to know premium?
They may be overpaying what they don't need to pay.
Yeah, they might be overpaying. What else?
Come on, people, help me out. I can't be the only one answering.
Good job, Shelley. Shelley, you get an A for today.
Yes.
What else? Why else do we want to know their premium?
Sometimes I want to know how much you're paying for it, because if the face amount doesn't align with what they say it is, like they tell me it's a whole life plan, but the
Yeah,
face
you can
amount,
cross-check that. Yep.
right? But the
There's
face
some-
amount, but the dollar amount doesn't align with the face amount.
Yeah, pay $30 for a whole life policy for 300,000. Yeah, it's not a whole life.
Right.
We know. Yeah. There's something else though. I'm taking it a step further.
I think it kind of shows like their budget and what they're willing to pay also.
Exactly. It shows it shows their budget. And if we're going to reallocate that budget, it tells us what we can reallocate to where. It might be reallocated to DFL. It might be reallocated to an IUL. It might be just what Shelley said, and we can get them a better price. It might be that premium. It might tell us how they prioritize life insurance. Because we've all ran into those people who are like, life insurance nuts, right? They got like 800 policies and it's just no rhyme or reason. And maybe we can streamline it for them and make it more efficient. Hey, what's the purpose? Is it death benefit coverage? Great. How would you like more death benefit for no more amount of money out of pocket? Great. Hey, I'd like to use this for tax-free retirement. Awesome. How would you like more tax-free money in retirement for no more money out of pocket? What, you can do that? Yeah, this is how. So it tells us a bunch of different things. Why do we want to know cash value? If there's cash value in a policy, why do we want to know that?
Show me the money.
Yeah, 1035 it, right? So we know how long they've had it. We can kind of back into the math how long they've had it. We can 1035 that. Why else? Why do we want to know the carrier? What does the carrier tell us?
I think it could tell you like, depending on like them getting approved as well as like what riders or benefits they offer.
Sure. Yeah, it can tell you, if it's AIG and the numbers align, right? You might be thinking, there might be some kind of final expense deal. You might also, it might also tell you, hey, they're paying, we know that certain carriers are more expensive than others, right? We know that there's some term products out there that are really, really expensive. We might be able to beat the price. It might be a simple replacement, something they already have. And the next expiration is pretty self-explanatory. Why do we want to know the expiration?
So you want to know when they're available. I mean, if they have term policy, for example, that's about to sunset, then you know what their exposure is and the
Yeah.
importance of the timeliness.
Yeah, perfect. Yep. Now, coupling that together is going to give you, I mean, we unpacked a lot in just, 1, 2, 3, 4, 5, 6 or 7 little questions on their existing insurance. We unpacked so much there. So much. They told us a lot about their life, what they have, what they don't have, what the priority is, what their budget is, just in that. Okay. Now, who wants to give me a transition from insurance to assets? Hey, I contacted you about mortgage protection. Why do you need to know about why are you asking me about my 401k?
I usually say if you were to die tomorrow, Mr. Smith, is there anything that will go to Mrs. Smith that can help offset the mortgage?
Yeah, it's perfect. It could act like life insurance. Any other accounts that have a name beneficiary that could act like life insurance could help the family out. God forbid something happens to person A or B. For example, do you carry funds in a 401k? Right? I'm not the biggest fan of the way this is set up. Just I asked some other things. Let's say they have a 401k. What else are we going to ask?
How much is in it?
Well, what the value is. Okay. What else are we going to ask? Stay with me, Dominic. What else are we going to ask?
And what's your overall intention? Is it to use it for retirement? Or do you have
What's
something else in mind for it?
what's the purpose? And a lot of times, if you want it for retirement, like I'm going to watch my body language, my tonality. Dominic, I'm going to assume that this is for retirement. Notice how I'm concerned, but I'm going to assume this is for retirement. Yeah, right. He's going to say yes. Now, when you do those types of things, you're controlling the narrative in people's heads. They're not controlling their own narrative. I'm asking questions. I'm using my nonverbals, okay, to control Dominic's narrative. Now he can't come up on it with his own. Okay. Now, what if somebody says they have a 457 or a 403B? But I think 457 should be out of here. What if somebody says they have a 457? What's the next thing you're going to say? You could do it with 403B too.
I don't
What
know
else
what
do
a
we
four. I don't know what a 457 is actually.
A 457 is a government sponsored state and local government deferred compensation plan. That's kind of like a 401k. It's in the market, but it does not have early withdrawal penalties because they retire so early. But pretty similar. So what would you say? You know what you say with a 403b?
The same thing I'll say for a 401k, I guess.
Yeah, you're going to ask all those same questions, but with a 403b and definitely with a 457, you're going to ask, oh, do you have a pension? Okay. Do you know how your pension works? Oh, okay. All right. If you pass away, how much goes to your spouse? Is it the full pension? Did you have a survivorship? Okay. Why do we want to know? if they're contributing to a 401k.
IUL or annuity potential.
Or DFL. It could be, we could reallocate those funds. Now, if they're contributing, here you go. Let me ask you guys this question. If somebody says, oh yeah, I have a 401k and the value's 60 grand and they are contributing, how much of that 60 grand can you use if they're under 59 and a half?
0.
Zero. Okay, I get a lot of calls. People saying, oh, this person has 180,000 in 401k. I'm going to use 60% of that and put it into DFL. If
No.
somebody's still working at their company, if they're still working and they're under 59 and a half and contributing, they can't move any of it. If they're over 59 and a half, sometimes they can move it. It all depends on the custodian. Okay, the plan administrator of that 401k, if they can move it or not. What else do we want to ask right after we ask, are they contributing?
Is their employer contributing?
Yeah, you're getting a match. Good job, Shelly. A+ today. Are you getting a match? Why is that important?
Because if they're not getting a match, then they should be putting their money elsewhere where they can gain money.
Yeah, probably if they're old enough and it makes sense, right? We could reallocate that after tax, because that's you probably pre-tax dollars. We could take that after tax dollars and we could reposition that in a DFL participating whole life or in an IUL 100%. What if they are getting a match? What's your next question? Oh yeah, I'm contributing $500 a month. Are you getting a match? Yeah. What's your next question?
I would ask them, are they matching the employer or are they over matching? Or are they,
Yeah.
putting in more?
Are you contributing over and above your match?
Right.
Yep.
And
Perfect.
then I would tell them that if they were going over and above, then they need to stop doing that and take that money.
Hold
and put
on,
it somewhere else.
you're right. But right now, at this point, I don't show those cards.
Ah,
At that point, I don't show those cards. Like somebody might, I'd say, okay, Shelly, role play with me. Hey, Shelly, a lot of my clients don't realize that other assets, such as a 401k, 457, 403b, IRAs, savings accounts, they don't realize that those will also act like life insurance, things that have named beneficiaries. So for example, do you carry funds in a 401k?
yes,
Okay. Is that with your current employer?
yes,
Are you contributing?
I am.
May I ask how much a month you're contributing?
About 500.
500. Are you getting a match on that?
I am.
Are you contributing over and above the match?
Yeah, they're only doing 3%. I'm doing 5.
Okay, so 2% over. Great. Now, depending on what I've got going on, I've been doing this a long time, and I can kind of go toe to toe with these people sometimes, and you'll get a feeling. If you're new and uncomfortable with this, you don't want to. You just want to keep going. I might say, when she says, "Oh yeah, I'm contributing over," so role play with me again. Are you contributing over and above the match, Shelly?
I am.
Okay. By how much?
By 2%.
Oh, interesting. Okay. Do you have any? And I just drop a no, interesting. Interesting. A little bit of pause. Go on. Now I'm just what right. The client gets that fear of missing out. They get that. Oh my God. What Jeff? What do you mean by that? Why did you say that? Oh, nothing. I'm just nothing. I just taking notes. Right. And you start to create doubt. And all I did was say one word, pause. You're starting to create that. Okay. Now I'm getting a little deep, but if somebody has a 403b, you're going to ask if they have a pension, but what else are we going to ask? What else are we going to want to know if they have a 403b? What's something really good to know?
I don't know a whole lot about a 403b, so I don't know.
403bs are not-for-profit employers, just like a 457, but it's not for profit. So has anybody worked the 403b market on this call? No?
Yeah, I've done it before.
Okay.
Yep,
What are we
I've
gonna
done one.
what are we gonna know? What are we gonna want to know about 403b?
Well, what I did was I rolled, the person left that job, so I rolled over the 403Bs into an annuity.
Okay, now here's the cool thing about 403Bs. Usually those companies have what's called an approved vendor list, especially if it's a school district.
Yes. Yeah.
If they work for Buncombe County School District or Saucon Valley School District or wherever, you can get that approved vendor list and you can do an in-service role. And a lot of times they have North American, LSW, Minnesota Life. They have companies that are approved that we can represent. Okay, so you can actually do an in-service role if they're still employed. And then let's say it's North American, then you can do an IUL with that money with North American, and you look like a stud because, or a genius, because you are using companies that have already been approved by their school district. Okay, so you always
So how
want
would
to
you
find
go
out.
about that, Jeff? How would you, in that scenario, how would you go about that?
Right here, I'd just be like, okay, Mohammed, so you're a teacher?
Yes, I am.
Okay, first off, you have 403B, do you also have a pension?
Yes, I believe so.
Yeah, do you know how that works? Is it a defined benefits plan?
I'm not sure.
Okay, we probably need to look into that because you'd want to know, would you want to know now or after you already passed away, how much of that pension your spouse got?
Oh, now, definitely.
Yeah, now, right? So I'm moving your action threshold to get that information now, okay?
Okay.
And I'm creating doubt. So we're going to find that out because I can't really make a proper recommendation to you until I know that, right?
Yes.
Okay. So let's talk about this 403B here for a second, Mohammed. What school district do you work for?
Prince George's County.
Okay, so you're in Maryland?
Yes.
Okay, great. And I'm just making notes of that, Prince George's County. Okay, you know what, I can, not that I know exactly how your pension works, but I can look at, get some information on that 403B for you.
Okay.
All I want to know is that, because I haven't made a recommendation yet. I'm not going to show my cards yet. Okay, my cards are right here. I'm just getting more cards and rearranging my cards right now based on what you tell me. Okay, so on here, we're going to want to know what they are. We're going to know what the value is. We're going to know if they're currently contributing. We're going to know if it's over, if there's a match, if they get a match. We want to know if it's over and above the match. There's something else we want to know here with this group. We'll go to just with this group, 403B, 401k, IRA. There's something else besides we went over what else we want to ask. I'm going to take annuity separate.
Do they have any other form of savings tool?
I'm going to ask that. We're not going to do this right here. We're going to go to
Okay.
the income. I'm going to ask that when we get to income.
Got you.
Okay. Again, I'm not the biggest fan of the way this is laid out. So I'm going to kind of do it my way a little bit.
Are you wondering who the custodian is of the
Yes,
401k?
who said that?
Julian.
Julia, good job. Why do we want to know that, buddy? There you are.
Well, I mean, the headaches that I've gone through, I mean, not all custodians are alike. So you may get more pushback from one versus another. Some of them drag their feet and some of them are more efficient.
Okay, you're right. But I'm going a little more simple. I'm going a little more straightforward and simple than that. If somebody says, oh yeah, I got an IRA. Oh yeah, I have a 401k. Who's it with? Oh, it's with Ed Jones. Oh, it's with Charles Schwab. Oh, chances are that's self-directed. They walk down the street to their, financial advisor in a box and they have the money with them. Oh, interesting. Okay. Now I'm pretty sure it's self-directed. We can move that anytime. It's not with the current employer. Okay. A lot of people, you have to err on the side of people not knowing what they have because they really don't. Okay. So always ask, Julian, you're right. Ask who that plan administrator, ask who that custodian is, because it might tell you a lot about what's going on and what they really have. Good job. Okay. So guys, I'm going to be completely honest with you. I again, haven't done mortgage protection. I don't get into any of this. I don't care. Okay. I don't care what they pay for their trash bill. I don't. Now, if they're like, yeah, I can't really afford anything. Okay, maybe you get into that. I go to this. I go to this, and then if they have a pension, you can go here. how would you transition from asset into income?
Well, I mean, so I'll make a statement, but then I do have a question. So,
Yeah, go ahead.
Any annuity that you are going
Oh, I
to,
forgot about annuity. Ooh, I forgot about annuity.
any
Good-
annuity
good
that you're
thought.
going to go with, there are going to be suitability components. So my question is, I don't know how you get around the suitability piece if you don't know the expenses, because they're going to ask that suitability, but maybe you'll explain it to me. But how I would transition is just to say, you know, part of what we do is we're not the judge, we're kind of the jury, and we kind of have an understanding as to how the carriers are going to appreciate this. And so they're going to want to know your income to determine how much of the annuity you actually are going to qualify for.
So we're not really
I don't know if that's right.
concentrating. We're not really concentrating on annuities today. We're just doing FIFs in general.
Oh, I'm sorry.
We
Okay.
kind of went over. We kind of went over annuities.
I apologize.
Yeah, no worries.
Well, I would still want to know income, because in
Yeah.
terms of budgeting, how much they can pay in terms of premium, I would still want to know how much cash they're working with to determine.
Yeah, I would say something similar. Hey, what I need to know now is a lot of my clients don't realize that not only is the mortgage debt passed along, right? But also a lot of my clients don't account for income replacement. So let me talk about the income with you guys. Okay. How much income from each one of you do you bring in every month? And that's how I get into income. Okay. I do it as some income replacement. I'm not saying you're not going to ever work again. You're going to want to take at least a couple months off. God forbid your spouse passes away. Right. So if we can just get an idea of how much income you guys are making, that'll help me. Now, what I'll do is I'll say, okay, we got your combined income here as 10 grand a month. Okay. I'll say, okay, if your combined income is about 10 grand a month, how much of that goes out to normal expenses? Now, if somebody says, oh, 8 to 9,000, they're paycheck to paycheck. Now I might jump in there and do that. Okay. But if they're like, oh, it's 7 to 8,000. Okay, now there is a cushion. If they tell you like $1,000 less, they're bringing it right up to the 10 grand. But if they give you a bigger cushion, because if they say, oh yeah, it's 7,000, then they're not going to balk at $100 a month, $300 a month, anything like that. They're not going to balk. But if they say, oh, 8,000 to 9,000, you might need to look for some extra premium. I don't get too granular here because I can kind of tell what else is going on up in this area. I when you do this a long time, you can kind of tell what's going on. And I'm looking from an advanced market standpoint. I'm already looking at, are they getting a match? No, great. I've already found premium. Are they making an overpayment? Great. I've already found premium. I've already determined where that premium is going to come from. I don't need to mess around with their monthly expenses. Okay. Now, if you're doing mortgage protection, I imagine they say, hey, my combined income's 10 grand. Oh, we spend 8,500 and 9,000. They're living paycheck to paycheck. But if they say, I don't know, 6,000, 7,000 a month, there's room in there. And if there's not room in there, what I would do is I would come back and say, oh, so maybe your expenses aren't $6,000 to $7,000 a month. Go ahead, Mohammed.
Hey, Jeff, would that 10,000, would you ask them to be net? Is that what they bring home after taxes, or is that the gross?
To me, it doesn't matter. I'm basically judging what they say and how they say it. I'm not a very granular person when it comes to this. I'm judging their body language. Maybe, how, yeah, we have 5 grand, 6 grand. Okay, great. So what I'll do is even if they say, oh, $9,000 a month, if they come back and they say they balk on anything, there are 3 objections. You guys might have heard me say this. There are only 3 objections in all of sales. What are they?
Product, price, and personality.
That's right. Product, price, and person. Gotta make sure I do it right. Product, price, and person. Okay, so if
The
it's the
three Ps, right?
price, yeah, the three Ps, if they balk at the price, I'm gonna go back here and say, oh, no, wait a minute. You told me that you had an extra $1,500 a month, and this is only, $100. Oh, well, okay. Now I might go in and start breaking down budgets. Okay. But from an advanced market standpoint, I want to teach you guys how to completely eliminate the objection of price, because we're going to reallocate and pause retirement dollars. We're going to reallocate overpayments to debt. We're going to reallocate if they're paying anything existing to any insurance. Okay. We're already fine. We already have the premium somewhere else. We're not I don't want to care what somebody's paying for the trash bill. Okay. And if somebody came back to me and be like, oh, well, you told me you had an extra $3,000 a month. What? I don't understand. Oh, okay. Well, it's not. Now you've caught them. Now you say, hey, we got to be honest. Okay, moving forward, these kind of decisions require the same kind of honesty as when you walk into your attorney's office and said, yep, I robbed the bank. Now you got to help me get off. Okay, we got to have that kind of transparency, right? That's the kind of relationship you have to have, that relationship that you would have with your attorney when you got caught doing something bad. Okay. Oh, okay. And they laugh, but it's true, right? You want to have that relationship with your clients. So here, I will get their income. Something else you can ask that dovetails into here is the transition that gets you into debt is, hey, guess what? Not how much of that 10, let's just say 10 grand, how much of that 10 grand goes out to credit card debt, student loan debt, personal debt, and car loan debt. Okay. And then they'll be like, well, why do you need to know that? Well, a lot of my clients don't realize that not only is the mortgage debt passed along to your spouse, so are other debts. Oh, okay. So, I usually start with car loan debt and student loan debt. Why? I won't mention credit card debt right away. Why would I mention car loan and student loan debt first?
Everybody's got a car loan debt.
Yeah, it's
Common,
common. It's more palatable. It's good debt. Car loan's good debt. Student loan's good debt. Hey, Mr. and Mrs. Client, we're racked up like what, 50, 60 grand in credit card bills? I see all this stuff around the house, right? No, you're not going to do that. So what I'll do is you can say, hey, out of this $10,000, how much of that is really going to, this kind of outside the mortgage debt? Oh, yeah, we got about 4 or 5 grand. Now you're thinking, okay, monthly expenses are 5 grand. This comes, 4 or 5 grand. Now they're living paycheck to paycheck without without having them pull up their grocery bill every month. You know what I mean? And that's just me being. I don't like that minutia. That's just Jeff Sigworth. That's just my personality. I can't do that. Like, I don't even do it for my own house. My wife's a civil engineer. She takes care of that stuff. I'm looking at right now this big picture stuff. Okay. So what's the most important thing in this section of the debt information? Is it to know exactly what, every interest rate is at this point?
Not at this juncture. You just want to know whether they paying the bare minimum or they paying more.
Yeah. Yeah, but I'll be like, Mohammed, hey, Mohammed, you got any car loan debt?
Yes,
Okay, what kind of car you got?
Mercedes.
Mercedes. See, I'm making rapport there. Cool. I got a BMW. I don't really, every time I start it, I love that car, but if it breaks down, not a good day for me. Okay. Right. I'll start creating some rapport there. Okay. How much you still owe on the Mercedes?
About 15.
15. How many more years you got
15K.
left? 50K. How many
15,
years you got left?
15K, 15K.
That's what I said. 15K. How many more years do you have left to pay that off?
About 3.
3 years. Cool. Are you making any overpayments?
Yes.
Cool. How about any student loan debt? You got any student loan debt?
No.
No. Personal
Zero.
debt.
Yes.
Personal debt. Okay. What do you got?
Add it all up. Say about 20K.
20K. Okay. Are you making any overpayments to that?
Yes.
Yes. All right. How about credit card debt? Any credit card debt?
Yeah.
And total debt? How much do you think you have on credit card?
Credit card, I'll say 5K.
5K. And you're making overpayments to those?
Yes.
Yeah. Okay. So let me now right here, I'm going to ask a question. I think you can do this whether you're doing mortgage protection or anything else. you're gonna ask. So let me ask you, is getting out of debt a priority to you and your spouse, Mohammed?
Definitely.
Yeah, I see all these overpayments. You're overpaying your mortgage, you're overpaying all these debts here. So getting on a scale of 1 to 10, how important is it for you and your spouse to get out of debt?
11.
11. Great. So now I'm moving on. Okay. But at the end of the mortgage protection sale, whether it's sale or no sale, I'm going to ask some reset questions. Okay.
Mhm.
Hey, Mohammed, you said you said getting out of debt on a scale of 1 to 10 was an 11. So let me ask you, if I could show you a way to get out of debt and build wealth in half the time than you're currently on, is that something that you'd want to hear about?
Oh, yes,
Would retirement be more comfortable?
definitely.
Great. Well, I know a guy named Mike Resma. He is an expert in our tax-free, or sorry, tax-free. It's Monday. In our DFL program, our debt-free life program. I would like him to educate you on the program. You can do with the information whatever you want. Now his calendar backs up pretty quick. He helps a lot of my clients out. He's available at 1:30 p.m. tomorrow. Does that work for you and your spouse?
Yeah. What program you say that is again?
It's our debt-free life program. It's where
Oh,
we get clients out of debt in half the time with no additional money out of pocket.
oh, that's wow.
And Mohammed, if Mike asks you to spend one more dollar than you're currently spending, you can shut off the Zoom call per me. You can tell him I told you that too.
Okay. All right.
Okay, cool.
Mhm.
See, now there's no obligation. Now it's just he's educating you on our debt-free life program. You can do with the information whatever you want. And if he asks you to spend one more dime than you're currently spending, Mohammed, you can throw him out your house.
Okay.
Okay,
All right.
that's the reset.
Yeah.
Okay, that's the reset. Thanks, Mark. And all I'm doing is edifying Mike as an expert who's helped out a lot of my clients. Okay, that would be a reset there. Now, let's say you didn't have that debt. Let's say you had a pension, you're contributing to a 401k. Let's see, at all this other stuff. Go ahead with me, Mohammed. Let's stay together here. Mohammed, you have a 401k. Your wife has a 403b. She also has a pension. Is retirement important for you?
Yes. Mhm.
Yeah, I can see that. Do you realize that all of these accounts are going to be taxed in retirement?
I had an idea of some of them. I didn't think all of them.
Yeah, right now the way I'm seeing it, all of them are. Do you think taxes are going to go down, go up, or stay the same?
Now go up.
Go up. So do you like paying taxes?
No,
No.
not at
If
all.
I could show you a way where you could get market returns, market-like returns that have downside protection, is that something you'd be interested in?
Oh yeah, 100%.
Yeah, and have that tax-free to supplement your taxable accounts in retirement.
Yeah. Mhm.
Okay, great. So I just reset myself for that. So whether you're resetting a subject matter expert or you're resetting yourself, you want to come in here and read exactly what they've got. Now, I forgot annuity. Okay, I did forget annuity. Again, I don't, just if I was going to set this up, I'd set it up. Okay, who else wants, Mohammed, you get an A+ too for the day. Who else wants to role play with?
I can role play.
All right, awesome. Dominic, so I'm not doing any second or third layer questions. I'm just asking about your annuity. Dominic, tell me about your annuity. Is that an old 401k? How did you come across that annuity?
I've actually it was actually a rollover from a 401k.
Previous employer?
Yeah,
How long have you had that?
maybe for about 5 years.
5 years. Do you know what company that's with?
I don't remember. New York Life.
New York Life. Okay, is that a what's called a SPIA? Are you currently getting any income from that?
I'm not getting any income from it yet. No.
Okay. Now I gotta try and be Jeff Sigworth would dive in. Like I would go. I'd put on my cap, put on my goggles, go like this, like do my Michael Phelps, and I'd be diving into that thing. Okay. That's what I would be doing. Now, if I was a new mortgage protection agent, they probably can't dive into that. You know what I mean? So I would probably leave it with how long have you had it? Where did it come from? And what company it is. Okay. Because you're probably going to reset that opportunity for our partners, our QRS partners or a subject matter expert. Now, Jeff Sigworth is going to say, if you are comfortable with annuities, comfortable selling annuities, I'm going to say, Dominic, do you know if that's scheduled to be annuitized or not?
It will be.
It will
In a
be.
couple more years. Yeah.
Okay, interesting. Do you know the interest rate you're getting on that annuity?
No, I don't.
No. Are you aware of any fees that you're paying?
No, I'm not.
Okay. And you said it's with New York Life.
Yep.
Notice my tonality there with New York Life. New York Life, they have one good annuity. It's their SPIA. Very familiar with it. Okay, interesting. Now, if I go through and I would say, Dominic, if there was a way I could show you to eliminate the fees and actually turn that annuity into more money every month, is that something that you would be interested in?
Yeah.
Yeah. So I usually would ask, is that live on or leave on money? But I know because he already said it's scheduled to be annuitized. Okay. So normally I would ask, hey, tell me about that annuity. Is that live on or leave on? Oh, it's live on. Okay. Is it scheduled to be annuitized? Okay. But what am I doing with everything on this page? What am I doing?
Gathering information.
I'm asking questions. Why am I asking questions?
To know how
When
best to
asked-
serve your client.
Yeah, I'm not selling anything. If I asked you, hey, Mohammed, with your let's say your annuity is live on. So tell me about your annuity, Mohammed. What's the purpose of that annuity? Is it live on or leave on money?
Basically, I would say leave on.
Oh, it's leave on. Okay.
Yeah.
Are you leave it to your kids, your grandkids?
Yeah, for my kids.
Okay. If I could show you a way where you could actually take that asset and turn it into more money for your kids, is that something you'd be interested in?
Yeah, definitely.
So we might do a single premium whole life there, purposely make it out. Take that net worth and that amount, automatically up his net worth and have him leave more to his kids. Okay. So somebody else role play with me. Mohammed, you can still get an A+. Somebody else role play with me.
I have a question for you, Jeff, real quick.
Okay, go ahead.
When Dominic mentioned to you he has an annuity, would you ask him the current value of the annuity?
Yeah, I would ask him the value. Yes, I would.
Okay.
I would ask him what it's worth, what's going on. I was trying to, in essence of time, I saw the pocket and I was trying to roll in that. Somebody role play with me about a 401k. So you have a 401k.
All right, I have a 401k. Marvin.
Okay. Okay. So you have an existing 401k?
Yes,
What's the value of that?
about 300,000.
You ever lost money in that account?
If I ever lost money, oh yeah.
Have you ever lost money?
Oh
Okay.
yes.
In the next economic downturn, how much of that are you prepared to lose?
Not prepared to lose anything. I mean, I
Yeah,
don't-
that's great. That's great. 'Cause I only want to work with the money you don't want to lose. Okay. A lot of my clients feel that way. They don't want to lose any more money. So if I could show you a way where you could get market-like gains and have downside protection, is that something that you'd be interested in?
yeah, let's do it. Let's do
Okay.
it.
See, have you ever lost money? Of course you've lost money. Here's another one. Same thing. Stay with me on this. Hey, tell me about your 401k. What's the value of your 401k?
Oh, you talking to me?
Yeah,
Oh,
keep going.
300,000. Yeah.
300,000. Great. When's the last time you went over with your financial advisor how much it's going to pay you in retirement?
Embarrassed to say that, but it's been like 6 years ago.
6 years ago. Okay, so you're not aware of your income gap then in retirement, are you?
Not really. I mean, I
Would
just
you?
saw it the other day and I was in shock. It was 0.05. I was in shock.
Okay, so with respect to the income gap, would you rather know now what that gap is, or or after you've already retired?
No, I want to find out now. I mean,
Okay, great. See, now I've gotten myself into an avenue where I've created doubt in what he has. And then I'm gonna say, okay, so if you don't know, then you probably don't know how much that's gonna pay in retirement, do you?
nope.
Okay, let's take a look at that. So these are the things that we can create doubt, move that client's action threshold forward. Okay. second and third layer questions. So if you're doing a mortgage protection sale, go through it. But then when you come back to and you see, you know, a debt-free life opportunity, you see an IUL opportunity, what are you going to talk about? You're going to talk about with the IUL, market risk, taxes. Okay. When you see DFL, you're gonna hit that bruise of overpayments. Are overpayments a priority for you? Yeah, they're great. If they're not making overpayments and you ask their income and they say, how much of your income goes out to your debt? And they're like, oh yeah, a lot. Okay, is getting out of debt a priority? It is. And then if it is, and you can ask them if you don't see overpayments, you say, hey, if getting out of debt is such a priority, how much do you feel comfortable allocating to paying off your debt sooner? Now, this isn't any more money out of pocket. You're asking them if they haven't prioritized it based on what they said. So based on their answer, you're going to see how paycheck to paycheck they are, or how much of a priority it is. If it's a priority, you guys want to get out of debt, like, yeah, $50. Well, that's not your client. Okay. But they might say, hey, you know, maybe you could probably do 300 to 500 hours. How much can you invest in getting out of debt soon? Notice I use invest, not spend. Invest in getting out of debt soon.
Yeah, $500. I don't know.
$500. Oh, okay, great. Either I'm gonna reset you. Hey, tomorrow at 1:30, if that works for you. If you can have all your statements on all of your debts, and I literally, I'm gonna put this into a system to see if it works for you. Takeaway, to see if it really works for you. But I need to have good information in the system to get good information out. So if you could come with all your mortgage statement, your credit card statements, your student loan statements, everything, so I can put accurate information in and see if it'll work for you. Does that sound good?
Sounds good to me.
Great. See you tomorrow at 1:30. Okay. You could write down my number and, you know, here's the Zoom link. I'd go in and get the Zoom link right then and there, put it on your calendar, write a note, and make sure they show up.
Now, let me ask you a question. Would you move the amount of money that I have right now to a different company in order to gain, or you're going to stick with, I don't know, New York Life?
I don't know. It depends on surrender. It depends on what they've got going on. I know that New York Life's annuities, other than their SPIA, aren't that good. I know we kind of started this as an annuity call, but I turned it in more of an FIF call because you're kind of done with annuities. But I would, if somebody has an existing annuity, I'm going to see what their surrender charges are, how it's performing. Is it set to be annuitized? If it's set to be annuitized and they've had it for a decent amount of time, I'm getting that thing out of there. I think annuitization is one of the worst things you can do. Love annuities, don't like annuitization. I know that sounds like jumbo shrimp, parking a driveway, driving a parkway, but it's true.
Okay.
Okay. What other questions you guys have? Questions, comments?
No, I don't have any questions.
I only have a comment. I thought this training wasn't gonna happen today. I was like, wait, I just saw the email because from Friday meeting, you told you were gonna be out of town or something.
Yeah, it's next week. It's next week.
Next week.
I'm going to Costa Rica next week.
So I missed the first 15 minutes. So I can't wait for the recording.
Yeah, don't feel too bad for me. I'm going to Costa Rica. Yes, sir.
There are references to takeaways, resets. In last week, you referenced the straight line selling system.
Yep.
So if someone wants to take another step into the professional realm of sales, where would you say they should start? Question number one. Where would you say their second step would be?
First step, I would get really good at the Socratic sales process. Okay. I tell agents this all the time. How many of you guys have a post-it note right by your computer where you're sitting? Okay. I want you to write on there at the top. I want you to split it in two sections. The top, I want you to write life insurance agent. Okay. And I want you to cross that out. Okay. Then I want you to draw a line halfway through the middle of the paper, and I want you to write professional question asker and put that up against the screen. Because if I say, Eric, based on the information you told me, you're making overpayments to, actually it was Mohammed, but we'll use you, Eric. Based on what you just told me, you're making overpayments to your car loans, to your personal loan, your credit cards, and your mortgage. Is that right, Eric?
Correct.
So getting out of debt's a priority for you and your spouse, isn't it?
Correct.
Yes.
Now I'm not selling you anything. Now I'm giving you what is important to you. By asking those questions on the FIF, I find out what's important to you. In my other example, when somebody has, Muhammad, I think, had a big 401k, his wife had a 403b, and they had a pension. And I go, wow, retirement's important to you guys, isn't it? You guys are doing a good job putting stuff away. Okay, yes, it is important. Great. Did you realize it's all going to be taxed? Yeah, I guess we did, or no, we did. Okay. Does that concern you? Do you think taxes are going to go up, down, or stay the same? They're going to go up. Well, does that concern you? Yeah, it does concern me. Now I'm getting them to tell me what concerns them. In this call, you're going to remember more about what you guys said than what I said. That's just human nature.
So be a really good investigator and just make sure you don't end up looking like Inspector Clouseau.
Yeah, exactly. Yeah, that's a good way to put it. But just ask questions so they tell you what that priority is. Now you're not selling, you're just giving them solutions. Okay. I would get really good at that. That's number one. Books that I would read, books that I've read that have helped me tremendously. The Jordan Belfort, Straight Line, or Way of the Wolf by Jordan Belfort. Great book. Okay. Daring Greatly by Brene Brown. Okay. Now I'll tell you a little story. I read that book. My wife read it first. I read it after my wife. My wife's a civil engineer. Okay. She can't fail at her job. If she fails at her job, people die.
People die, yeah.
So for her to deal with failure, even like if the dishes aren't clean, and I joke a lot of times, you guys hear me joke, like, I can't even pack the dishwasher the right way. It's true. She has anxiety over things that aren't done perfectly because in her profession, she's been trained. If you screw up, people die. Okay. So to dare greatly is to get outside your comfort zone, make yourself vulnerable. Now in sales, in my world, guess what? We fail every day. Not everybody answers the phone. We don't sell everybody. We screw up our presentation. Right? Our schedules get crossed. We fail every day. Okay. Daring greatly teaches you how to fall forward, how to deal with those failures. Okay. How to be uncomfortable and grow from that.
Have you ever read Sometimes You Win, Sometimes You Learn?
Yeah, I have read that. Yes. I think Daring Greatly is way better than that.
Okay.
In my opinion.
What's the name of the book, Jeff?
Daring Greatly.
Daring
Greatly by Brene with a B, Brene Brown.
Okay.
I would read The Retirement Miracle by Patrick Kelly.
Okay.
The Retirement Miracle, Patrick Kelly. I would read Blink by Malcolm Gladwell. I also would read not a sales book, but I think it really helps in any business standpoint. Has anybody read the Man's Search for Meaning? Victor
What?
Man's Search for Meaning. It's not a sales book. Okay. So what it is, it's kid, 20 years old, 22 years old, graduates from college with a psychology degree and gets put in Auschwitz. And he tests his psychological theory, and he tests it inside out Auschwitz. Jewish kid.
I've not read it, but I've heard it mentioned so many times that something Franco is the author.
Yeah, Franco, Victor Franco, something like that. Victor Frankl, something like that. it is such a powerful book, and it really is. If you have meaning and purpose, you can do anything. Okay. So if you're what's my meaning and purpose? What's your meaning and purpose? Okay. Why are you doing what we're doing? It's huge. It's very thought provoking. Very thought provoking book. I love it. It's just it's a good book to read because it makes you feel really insignificant. That what you're going through ain't
Right.
nothing. It ain't nothing what you're going through. You know what I mean? And yeah, it's pretty powerful. Just a human story. It's a great book. Great book. It makes you want to work harder. It makes you want to be a better human being. It makes you realize that people have struggled and gone through some really bad stuff. And yeah, and it makes you really feel like you can make a difference, do anything, and get through the Holocaust if you put your mind to it. Because everybody who has meaning, your brain's very powerful to do whatever the hell you want. Good one. All right, guys. I'm 2 minutes late for the next one. All right. Thanks, guys.
All right.
Good to see
All
you.
right, thank you
All
so much.
right.
Appreciate
See you
it.
guys.
Thank
Have
you,
fun.
Jeff, so
Bye-bye.
much.
All right, Mohammed.
You got it.
You guys have
Anytime.
a great
You guys
week.
are great.
All right.
All right.
All right,
See ya.
Marvin.
Bye-bye.
Okay.
Thanks, Jeff.
Hey, Mark, stay on here.
He's
Okay.
gone. I think he's gone. Oh, I thought
Oh, Mark is there.
Mark is here. Hi, guys.
Hey. All right, Mark, I just had a couple of questions for you.
All right. And Morven, let's catch up later this afternoon or tomorrow. I want to make sure you have everything you need to get started, bud.
Yes. How about this afternoon? I started already, but I'm eager to start. You got
Okay,
it?
let's do it. I'm back around 5. Well, it'll be later, but 5:36 Eastern. Okay.
5:36 Eastern. Okay. All right. Let's do it.
All right.
Put you on the
Talk to
schedule.
you soon.
All right. Thanks. Take care. Bye.
See you, bud. And then Shelly, I just got a call. Can I, will you hold
Yeah.
one set?
Yeah,
Okay, thanks.
absolutely.